I would like to begin this conversation kind of like from a broader view, and then we'll get into some themes as we get into it. And to Yemi, kind of the question of 5 billion was raised last year. This is exceptional compared to the previous years. Like, what happened? What changed?
It's a very good question. What changed in 1 year? You know, I've been a technology investor myself for the past 20 years, and I moved from Silicon Valley to set up a VC firm on the continent about 12 odd years ago. So I've really been waiting for this day for us to be able to say what you just said, which is $5 billion invested in 1 year. I guess there are a few things. One is that over the past several years, the underlying infrastructure that is required to be able to build technology businesses has been developed. So that's made it possible for people to go out and build businesses. I think that's a big factor. Another factor is the influence of something called Y Combinator in Silicon Valley. So a few years ago, probably about 3 years ago, we had the first few African companies go through a Y Combinator, and those companies have, several of them have actually done quite well. That really increased the profile of the African investment opportunity in Silicon Valley. And the way things work in the valley, you know, once one person starts to look, all of a sudden everybody starts to look.
Yeah.
And then you get this flood of money coming into the continent. So for me, very, very excited, and hope it continues for a long time.
Yeah. I mean, you've worked on the continent from South Africa, and now you're based in London. But Isis, like, you have a very good view from East Africa as well, where most of these things began back then. What changes have you seen over the years to come to this penultimate time?
Yes, thanks, and glad to be here. I mean, I agree with what Yemi's already said, and I think that the transformation on the infrastructure cannot be understated. I mean, it's been hugely transformative in most markets, and also while there's always kind of this drive to keep bringing down the cost of data, improve the infrastructure, the cost of data has really fallen significantly over the past decade. And so just the internet actually just being more accessible. And on the skill side, I'm glad the minister mentioned that. That's a big piece of not only what needs to kind of continue, but also has been the last several years, huge efforts to develop digital skills in different ways. So you actually start to have a market that is, we always had the numbers. We didn't necessarily have the people online. We didn't necessarily have the access and the ability to actually start to use a lot of the applications that were being developed, certainly being innovated on in the previous 10 years as well. So that's been a big piece. And I think certainly a few exits have been, really gotten, because that was always the question for a number of years, will there have any exits, will there be, and so that has also kind of certainly stimulated a lot more interest as well.
Yeah, I mean, and I think that trend is continuing in 2022. In the first 4 months alone, I think we've raised over 2 billion on the continent. And one of the companies that raised money, or at least announced, is Copia. You raised 50 million at the beginning of the year. Could you just tell us the difference in this round compared to the previous rounds, and how that investment process has changed?
I wouldn't say the process has changed. I think investors' fundamentals are still the same. They're still looking for organizations that can scale, organizations that have built up track record, organizations that can reach profitability at an acceptable future point, and organizations that have business models that are replicable across the continent. And I think that's what we're starting to see more broadly, that there are the unicorns that are emerging are not emerging as unicorns because they're ideas now. They're emerging because they, like we have tried to do, is create platforms that are building significant number of customers that are returning and adopting the value proposition that's being offered, and utilizing the emerging technology that's on offer, not just from a consumer interface perspective, but actually to deliver successfully the business as well.
Yeah, I mean, one of the things that comes up when you're discussing tech in Africa is there's some divisions like Francophone and Anglophone, or Sub-Saharan Africa, and then North Africa having its own kind of space. But for Copia, I found it interesting. It's an e-commerce platform, but it's not the same model as, say, Jumia. What's your thesis of scalable e-commerce businesses on the continent?
So the business that we've built is a B2C business, which is focused very much on the 750 million emerging middle and lower income consumers across the continent. Yes, there are different operating conditions in Francophone, in East Africa, in Southern Africa, and the Maghreb and so on. Those conditions are different, but fundamentally, the needs of a historically underserved consumer that has a very small wallet size, that has limited access to the internet, and has not had choice and access to fair pricing and so on and quality, that remains the same across the continent. And I think so long as Copia does, you stay focused on the needs of that consumer and building an offering which is appropriate to them, then you have a model which can be adapted and adopted anywhere.
Yeah, I mean, something interesting that came out about Copia was, I think, 70% of the agents that you have happen to be women as well. And kind of it goes back to the same conversation of the Africa's economy, at least the SME part, is run by women. And that brings us to this conversation of, if the economy is being run by women, then how comes the investment space in the tech space is not reflective of that? And Isis, like, why is that? And kind of like also maybe go into what's being done to close that gap.
Sure, and just to give you a sense of order of magnitude, I mean, of the $5+ billion raised last year going into early stage tech, different reports say slightly different things, but the ones that have gone into kind of women-led businesses is like less than 1% or something, less than 2%. It's really low. And while the kind of, it's also helpful to appreciate that of the money that's gone in, most of it's gone into fintech. There's some mega deals, so there's some kind of skewing around the overall pie. But I think when we look forward and saying, you know, the continent's probably going to be raising 10x of this in the next 5 to 7 years, we need to really look at what's going on with money not flowing to female founders. I think a lot of it is, I think it's happening by, not by design, certainly, but, there's a number of issues that have come up and solution. I mean, the way that many people are thinking about it is, one, you don't have a diverse enough pool of investors, right? So in terms of fund managers, LPs, IC members, predominantly male and predominantly foreign investment. And so looking at how do you actually really drive more women to, those decision-making processes, that when you look both at how deals are sourced, and very much the warm intros, the networks that is in many places, and those tend to be gender specific. So if you start to kind of diversify on the funder side, people to actually bring in more diverse networks coming into, let's say, the pipeline deal flow. There's also a lot of, both research, but also people's lived experiences on actually fundraising and bias that comes into the process itself. So women being looked at as more, what is your track record? More like this is going to be really challenging, versus men are kind of asked more kind of future-oriented, potential-oriented types of questions in the process itself. So I think a lot of the, and there's a lot of very active conversations, certainly in Kenya and Nigeria. This is not like something that has not been discussed in a lot of, across everything from the founders to investors, and we're starting to see a lot more investors deliberately bringing in women into, into the funds at the partner level, et cetera, in those that were not necessarily had any gender lens, any type of, gender lens, aspect to their investment. And also seeing that LPs are also asking questions and giving technical assistance in different ways to just bring in, widen the pool, both from the pipeline side, but also in the decision, and they're very much interlinked.
Yeah, I mean, we actually just had a story on this gender gap on Bloomberg.com, and it's just like, women fighting this tomato seller cliches, because you expect African women to be selling tomatoes on the side of the road, which is not necessarily the case, and it shouldn't be. Kind of just following that, Yemi, over the past year and 2 years, especially during the pandemic, we have seen a lot of deal flows going through, and partly that's why we've had this $5 billion investment. But that has also raised some of these questions. Also, the question of the gender question has also been raised, but also of governance and due diligence. I'm not going to go into the details, but there's something I think you call the Zoom deals. Can you just talk about the difference between how deals in Africa are made and how deals in San Francisco are made, and what the two sides can learn from each other?
I guess the more fundamental difference is between the approach of a typical venture capital investor when you go to do a deal, and a private equity investor. Right? So on the African continent, historically, everybody was a PE investor, i.e. you're investing in real assets and so forth. So you spend a lot of time doing due diligence. You hire accounting firms to look at the books and so on and so forth, right? So that's sort of standard PE type work. Now, in the venture business, it actually doesn't work that way for several reasons. One, the companies are much smaller. So there's, I mean, many times if you're doing early stage investing, there are no books to look at anyway. So historically, it just hasn't worked like that. But the whole system was contingent on, so let's say you were going to lead a Series B deal. You did that with the understanding that the institutional investors in Silicon Valley who led the Series A had done their jobs, right? So typically you would do what's called a bring down due diligence. So what's changed since the Series A, which means you assume that the prior investors did their work. Now the problem with that in a new environment is that you don't necessarily have this whole ecosystem of institutional investors who've done the work before you. So if you don't do the work, then there's a problem, right? Because somebody has to do the work, somebody has to be on the board, somebody has to be watching it. Everybody can be sort of remote and hoping everything goes well. So that's one of the things that I think for all of us in the industry is quite important to focus on. Certainly from a TPG perspective, we take it very seriously. So we apply the same level of rigor to all of our investments, whether they're Series B investments or a leverage buyout. But as we get more and more money coming into Africa, certainly if I were still at my old firm in Silicon Valley looking at a deal in Africa, I wouldn't just go do a deal without somebody who is a knowledgeable local investor investing alongside us. So at least we know there's somebody who understands the local environment that can help do the groundwork and ensure we don't run into any issues. So that's actually quite important. But the reality is, look, in an up market, there's a big fear of missing out. Everybody wants to get deals done. So you're going to have this everywhere in the world because deals are getting done in 5 minutes. Obviously, we have a correction now, so hopefully there'll be some more discipline in the process going forward.
Yeah, I mean, interesting. You bring out the FOMO part, but apparently there's also JOMO, which is the joy of missing out on on some bad deals. Yeah. And team on this, like, how do you prepare your company? How do you prepare yourself when you're approaching investors so that these metrics are met, this due diligence and governance issues are already addressed?
Yeah, I mean, in establishing a business like Copia, you continually wear two hats, the one that runs the business and the one that raises money, and they frankly take a virtually equal amount of time, and you need to put effort into both of them. And as a very early stage company, and speaking as a company now that's come through 3 significant fundraising rounds, you just have to get better and better. And really where it starts, I think, is with the people. The people that you have on your board are absolutely critical, and we've put a lot of effort into having the strongest, most diverse, most locally knowledgeable board that we can. The investors that you build up in your history who are credible, reputable, and locally knowledgeable again, who can, as Yemi was saying, give that level of recommendation, I think is extremely important. And just being prepared, trying to understand the way that investors think, the language they speak, and making sure that you are continually in a state of fundraising and ready to have the conversation.
Yeah. I mean, speaking of people on your board, I think Copia got an ex-Amazon director to join the team. So such valuable experience comes in handy.
Yeah, I mean, Amazon obviously is a great shining example of success to all of us, and the principles with which they operated the business that Jason Lombard, our recently appointed board director, Jason Murray rather, brings to us is inestimable, really. He's the knowledge and learnings that we can get from him allow us to sort of make great leap forwards very, very quickly.
Isis, and I'll ask this question with one of the questions that has come through, and it reads, what other digital services and tech-enabled solutions does Africa need, like remote healthcare, etc., and expand that just to where is the Africa tech space going? What opportunities and what is in the future for the tech space?
I mean, it's definitely a really exciting point in time. I mean, similarly, Yemi, I've been working in the space my whole career and never kind of been things you kind of dreamed of are like happening now. I think looking ahead, there's certainly, I think, a lot more just volume of companies being founded, different types of people coming in to found companies, a lot of activity outside of the big four markets, so the big four being Nigeria, Kenya, South Africa, and Egypt, and other markets on the continent. And so, yes, certainly, just the question here was actually specifically about healthcare, but in Kenya, we're certainly seeing a lot of healthcare startups getting funded, just different types of services in the health tech space as well as education. But also looking forward, I think I'm definitely seeing more growth in local investors. So in terms of the early stage, angel, pre-seed, a lot of activity there, as well as increased interest and activity around local corporate venture as well into this space. So I think that's going to be quite interesting and something that hasn't been necessarily as active. But.
Yeah, I mean, I think that conversation is very. Now we're always having it about having local investors in local startups, and partly because it also solves one problem, and I think Yemi, you've talked about this before, and one of the challenges is currency issues that you have when you're investing in some of the African countries. But in addition to currency, and maybe you can speak about it, what else do you see to be also a challenge stroke opportunity?
So currency, of course, is a challenge, given what we've seen in many countries. Well, one of the ways to there's several ways to address it. I mean, we look for businesses that operate across multiple African countries as a way to diversify risk from a currency perspective. The ideal situation would be to have a business that has local currency costs and hard currency revenue. That's the holy grail, and we've been able to find one or two of those. But beyond that, you just have to be able to outgrow the currency issues, which is one of the reasons why a lot of the interest we're seeing in Africa is really, so to the point Isis was making earlier around female founders and where they tend to be focused and where the money is going. The reality is most of the money is going into tech because these are hyper-growth businesses. If I have a business that's growing 50, 100% a year, am I concerned that the currency is going down 7, 10%? No, not really, at the end of the day. But if I'm investing in a business where I'm underwriting to a 25% growth, well, 10% currency depreciation really eats into my returns. So the focus then naturally has been on hyper-growth businesses. So that's the other way to try to address it. But there are a lot of different lenses to look at it, because the other point here is that almost all of the private equity, broadly defined, including VC capital on the continent, is in US dollars. Mm-hmm. So fundamentally, there's a currency mismatch, because if we had local pension funds investing in local fund managers in local currency, then you wouldn't care. Right? Like nobody in the US worries about currency mismatch. Because there's no mismatch in the currency. So that's a different point around where the money is coming from. But just fundamentally, those are the ways we try to address the problem.
Unfortunately, we have come to our time has run out, but we have so many other things we could have talked about for hours. And with that, I'll just say thank you for listening attentively, and thank you for the panelists for those very insightful comments. Thank you.